Markets Made Clear's AI-powered seasonal platform, designed to help you find the optimum period to trade any market quickly and easily. When you first log into our website, you will be presented with our seasonal dashboard. At the core of the seasonal dashboard, you will see the seasonal planner. This gives you the start dates of all the upcoming patterns. You will notice straight away that the patterns themselves are color coded. This relates to the three main patterns that we follow within the platform. The three patterns are the 20-year pattern, the all-time pattern, and the election pattern. All markets within our platform must have a minimum of 20-year history available so we can consider them seasonally significant and therefore look for the consistency within those patterns. The all-time refers to all the history we have for that market. In some markets it could be 50, 60 or even 70 years worth of data. The election pattern is the current cycle of the 4-year US presidential election. 2023 is a pre-election year, so the election pattern that the platform is showing is pre-election years only. Next year, 2024, the software will automatically switch and show you only election year information. The seasonal planner also allows you to click forward the upcoming 3 months and also allows you to filter out based on the markets that you're most interested in, whether they be stocks, indices, energies, metals, or other additional agricultural markets. To support your search in finding the best seasonal patterns, we also have a number of high performance tables. Firstly, we have the top 20 seasonal correlations. This gives us a list of the 20 markets where their current price action is following the historical patterns, making these markets ideal for further research and a higher probability candidate for actually following the upcoming patterns that we have in these markets. In addition to that table, we also have 2 other high performance tables, first showing the top 10 patterns with the highest success rate and the next showing the top 10 patterns with the highest annualized returns. Again, you're able to filter based off your interests in which markets you actually want to find. When you want to take a closer look at any of the patterns, simply click on any of the market headings on any of the tables and our seasonal chart will open. I want to take a look at an example in McDonald's, not only because it has a seasonal pattern here in April, but also because it's right at the top of our strongest seasonal correlations. It currently has correlations across the board in the pre-election, it's all year, and a little bit further down it's 20 years. So I'm going to click on the pattern for McDonald's. You can also click from within the correlations table, but clicking through from the seasonal planner, you can see here, this is why it was showing the 18th of April. This is the second pattern that our AI has identified for McDonald's, and we can see by clicking on it, we can get some additional stats for this market: an 85% success rate and a 51% annualized return based off the last 20 years. Along the top, you can see the seasonal correlations, and this tells us that McDonald's is following its seasonal averages very, very closely with 92%, 83%, 91% across the board. So very, very high probability candidate for the continuations of their current seasonal averages. In order to see just how closely correlated it is, we can plot the current year, and we can see McDonald's current year has followed the pattern as the correlations suggest. We have been range bound for the early part of the year, and we've made the low in the time to do so, and we've seen a breakout heading through the end of March and into April, again historically exactly as we do, and it's outperforming and pushing much stronger than what we would typically associate with a seasonal pattern, but it's very much in line with the pattern, and that is the type of market we're looking for. Markets that are outperforming their patterns, but ones that are following their patterns very, very closely. Scrolling further down, we can see additional performance stats. We have the average return per month with an average return per day, and we can see over this last 20 years McDonald's has been very consistent across the board, with its only down month typically being January and its strongest performing being April and November. April, we know based on the pattern art which our AI has found, is a very strong pattern, and it is right at the top of the list in terms of its performance. We also know this as well, the strongest pattern of the last 20 years our AI has identified is the first pattern of the year from the 24th of March to the 12th of April. That is this pattern right here, and it has a 90% success rate over this last 20 years, which is a phenomenal return for any pattern. We can see 18 wins out of the 20 years, 2 losses. Average trading days is 13. Total return, max return, max loss. Very, very consistent returns from that market. And along the bottom here, we can actually see the returns for each of the years. And again, it's a very, very consistent. We have one big spike here in 2020, but the rest of the years very consistent in terms of what it returns. And that's a nice indication of a pattern. It shows the stability of the pattern and the repetition of the pattern, and only those 2 down years in 2005 and 2015. So an ideal market and an ideal pattern that you should be trading or investing in. Our AI looks for the optimum period to trade any market. The optimum period is based off its historical consistency and its success rate, but also its return. So there will be periods that have higher success rates but lower returns, and our AI won't bring those onto the list. But however, if you wish to find additional patterns, you can do so using the custom range function. An investor, for example, may be more interested in holding this market for longer, not the shorter periods identified as the optimum by our AI. If you wish to do that, looking here at the seasonal low around the 10th of March and running possibly through even just till June, or possibly to subsequent highs in July or August, may be an option. And you can look for the stats within those patterns and within those periods using our custom range finder. So as an investor, you might want to be holding longer, and a pattern date from the 10th of March through to the 11th of August has a 75% success rate over this last 20 years, but a 21% annualized return. So typically the longer period will have a lower return, and that is why our AI focuses on patterns that tends to be shorter and tends to be anything between 12 to 18 days in length. But if you do want to find a lot of advanced features within our patterns panel on the left, the first one is our what if. What if is an excellent feature when a market is not currently following its expected seasonal pattern. If a market is expected to be positive through the month of March, but is actually showing bearish price action and not following its pattern, you can ask the platform to only show you the years where that market has actually been negative through March, allowing you to identify a pattern that's actually more relevant to what that market is currently doing. A good example of this was last year, whenever the British pound, which is seasonally very strong through April, one of its strongest seasonal periods is the month of April, but 2022 was actually a really negative year and one of the worst Aprils it has for many years. Historically, it is positive through this period, but we could clearly see that it wasn't following that pattern last year. It wasn't making the seasonal low as you would expect in March, and it wasn't trying to break to the upside. It consolidated and continued to break. So what we can actually do is ask the platform, in April, show me only negative years for this market. And that's exactly what we will get. Therefore, we can start to build a pattern and build a picture of what a market can do when it's not following its obvious seasonal patterns. But that doesn't mean there are no patterns it's following whatsoever. If we take 2022 out of the equation, you can see the platform would have identified and would have shown you how the British pound typically moves in years where we have a bearish April. We can see we break the lows heading into April and continue to move lower throughout the year, making a low in September and then having a strong move to the upside till year end. And if we'd known this information last year, rather than trying to be bullish during the historical seasonal bullish period through April, we'd have actually looking to be on the short side and continue to be on the short side throughout the year. And if we just look at exactly what 2022 did with a bearish year, it did continue bearish throughout the year, and it made the low exactly as you'd expect it to do on a year with a negative April, made the low 26th, 27th of September and had a strong rally to year end. So the platform allows you to find patterns that aren't obvious. So just because we aren't following the historical average doesn't mean we aren't following a pattern. It's just knowing what that pattern is, and the platform gives you the tools in order to do that. The second advanced feature, and by far the most advanced feature on the platform, is that of true path. True path, as the name suggests, allows you to identify the true path the current market is taking. And what I mean by that is, whereas traditional seasonal patterns group years together, like our 20-year seasonal average, where we group 20 years together and create an average movement over that period of time, TruePath enables our AI to only look for years that current price action is following, allowing you to identify patterns that are a much more accurate reflection of current price action. So you can use it to either confirm a traditional historical pattern or use it to identify custom unique patterns that you will not find anywhere else. I'm going to show you an example here. We'll use another currency again. We'll take a look at this time the Japanese yen. Looking at what we have here is the 20-year historical average, and looking at the seasonal correlations with the all years, it's in negative, so not following very strongly. With the 20-year pattern, current price action has a 62% positive correlation, so it's not bad, pretty strong, and a fairly weak pre-election pattern. So the strongest at the moment is the 20-year pattern. But if we put over the overlay of the current price action we have actually this year in the yellow line, you'll see we have a much weaker second quarter of the year, April through May and into June. It is pushing much stronger than what we typically see on the average year. Yes, we followed very nicely the 20-year pattern earlier in the year. We're starting to see an acceleration to the downside. So what we can do is use TruePath and allow our AI to identify the years that are an accurate reflection of, as I say, what current price action is doing, and it identifies those years, and we can see the years that it has picked up. And what that has allowed us to do is, rather than just looking at the average over a period of time, say 20 years, or in case of Japanese yen, it's 47 years, we're now only looking at these years which our AI has picked out that also had price action that is correlated with current price action. And we can see by looking at the 20-year pattern and comparing the two, we can use the new custom TruePath pattern either to identify, as I say, a completely unique pattern, a separate pattern, or we can use it to confirm the path ahead suggested by the historical pattern. Comparing the two, there's not an awful lot of difference going forward here. It does suggest a little bit of a bounce as we get into June, stronger in the TruePath pattern, but we do see a little bit of a move to the upside, weaker period as we head into July, and both of them then suggest upside as we move through August. So that suggests there is a very strong likelihood that we're going to see that pattern play out, as both of them are actually a fairly accurate reflection of what current price is doing. Where it starts to get a little bit more interesting is going into the last quarter of the year. We can see TruePath is suggesting actually the Japanese yen has a much stronger performance than what we would historically expect to see. So that'll be a really interesting pattern to watch as we go through August and into September. Do we continue to push to new highs, or do we start to see a fall back towards the historical averages? But at the moment, it's a nice confirmation, and it's backing up what the 20 years suggesting, and we have a pretty close correlation with the 20 year. So it's backing up what we're saying there. I'm still looking for moves to the downside, but as we move into August, anticipating some strength from the Japanese yen, and then looking at the possibility actually of outperformance by the Japanese yen. And that's where TruePath comes into its own, allowing you to identify not just historical seasonal averages, but seasonal averages that are actually a true reflection of a market's current price action, and therefore giving you a true path forward of what that market is really doing. Get started for yourself and start finding your own excellent seasonal patterns, and more importantly, finding excellent trading and investment opportunities.